Hey everyone, welcome back to Corporate Decoder, the place where we break down big company secrets so you don't have to. Today we are diving into Marcus and Millichap Incorporated, their latest financial report, and let me tell you there are some interesting moves happening in this one. Before we dive in, if you appreciate getting the real story behind these corporate filings, smash that like button and subscribe. We also have a fantastic community on Discord, all linked in the description below, where we break down these reports in real time. So this report covers roughly the first 9 months of 2025, and it shows us a company that's navigating a shifting market. They are in the commercial real estate game, selling and financing properties, and a lot of what they do depends on how the economy is doing and how easy it is for people to borrow money. Think about it, if borrowing money is expensive, or if people are worried about what the future holds, fewer people will buy or sell big buildings, right? Let's peek at their balance sheet for the 30th of September 2025. Total assets stand at a pretty hefty $812 million. That is down a bit from over $869 million at the end of 2024. This drop seems mainly due to a decrease in cash and certain investments they hold. On the flip side, their liabilities are around $210 million and stockholders. Equity is a healthy $602 million. So overall, the company appears financially stable, but the cash position has seen a notable decrease, which warrants a closer look. Now let's look at how they performed financially. For the 9 months ending the 30th of September 2025, total revenue hit $511 million. That's up from about $456 million in the same period last year. A solid 12% increase. The big driver here is real estate brokerage commissions, which brought in $427 million, almost $41 million more year. Financing fees also jumped significantly up by nearly $17.4 million. This shows that despite economic uncertainties, their core business is bringing in more money. However, their costs have also gone up. Cost of services jumped by almost $36 million to $316 million. This makes sense because when you make more money selling more properties, you generally have to pay more commissions to your agents. Selling general and administrative expenses also increased by about $11 million. When you roll all that up, their operating loss, although still a loss, narrowed significantly. For the first 9 months of 2025, the operating loss was about $29 million compared to almost $40 million in the same period of 2024. So while they are not profitable yet, their losses are shrinking, and that is a good sign. When we look at cash from operations for the first 9 months of 2025, it's positive at $20 million. This is a massive improvement from close to $35 million used in operations in 2024. This tells us the business operations themselves for the first time in this period are actually generating cash, which is a critical sign of health and improved efficiency. Now let's talk about their investments. They hold a significant amount in marketable debt securities. At the 30th of September 2025, they had about $264 million in these investments. The interesting part here is how they value these. Most of it falls into level 2, which means the prices are observable but not always in super active markets. Some are even level 3, meaning they rely on the company's own estimates and assumptions, which can be a bit less predictable. They did report a decent unrealized loss on these securities, but they state they did not have an intent to sell them, and it's not more likely than not that they will need to sell. This suggests they are comfortable holding these through market fluctuations for now. Now for a really significant development, in October 2025, a jury in Missouri slapped Marcus and Millichap with a verdict in a lawsuit. They awarded over $4 million in actual damages and a staggering $20 million in punitive damages to one party and another $10 million in punitive damages to a second party. This is a huge number, folks. The company is denying wrongdoing and plans to fight this on appeal. But as of the 30th of September 2025, they've already set aside about $4 million to cover the actual damages. The potential loss could be as high as $34 million. This is a major risk factor and a significant overhang for the company, potentially impacting future earnings and their reputation. You can bet management is glued to this one. On the shareholder-friendly front, the company declared a dividend of $0.25 per S-share in July 2025. This is a positive signal showing confidence in their ability to generate cash. They also continued their stock repurchase program, buying back shares, which can often boost shareholder value. For the 9 months of 2025, they repurchased about 264,000 shares for $8 million. When we look at stock awards and compensation like restricted stock units, these are a pretty significant expense. For the first 9 months of 2025, stock-based compensation costs were around $18 million. This is a big number, and it is crucial to track how these awards are structured and if they are creating real value for the company over time. Marcus and Millichap is showing resilience in a tough market. Their core business of selling and financing properties is growing, which is great news, especially given the economic uncertainty. They are bringing in more revenue and managing their costs better, leading to smaller losses. The positive cash flow from operations is a huge turnaround from last year and a very encouraging sign about the operational health of the business. However, that massive legal judgment out of Missouri is a giant red flag. It could drain significant resources and impact their reputation if the appeals are not successful. Their investment portfolio is a mixed bag with some clear observable values and some based on their own estimates. They seem to be betting on holding their securities, which is a strategy that can pay off but also carries risk. The company's direction appears to be focused on growing its core business and managing its expenses carefully while trying to fend off this large legal challenge. Their traditional strength in the private client market is serving them well, but they're also expanding into larger deals, which is a smart move for growth, but that comes with its own pricing dynamics. Overall, Marcus & Millichap seems to be on a path to improvement with strong revenue growth and better operational cash flow. But that lawsuit is the elephant in the room. If they can navigate that and continue to grow their core business, they could be in a good position. What do you all think about this report? Are you optimistic about Marcus & Millichap's future, or are the risks too high? Let me know your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up and subscribe for more in-depth analysis. Don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching Corporate Decoder, and we will see you next time.